Welcome to Markets Now. I'm Michelle Rook along with Naomi Blohm with Total Farm Marketing. We ended higher in just about every place in the ag complex with the exception of cattle. And Naomi, let's talk about the grains. We did get kind of a bounce here after our big down day yesterday. So was that all corrective, a bit of a technical bounce, or was there more to it?
A lot of things happening with the market today. We had the market higher for corn, beans, and wheat. Part of it was traders shrugging off yesterday's USDA report in terms of that corn yield number. I don't think that the traders were totally excited about that 177.5. Most in the industry right now talking about 172 to 173. And then also we have the Black Sea grain deal that's going to be expiring Sunday, Monday. And so traders are, of course, just a little cautious. If that deal doesn't get done, that would be bullish for the market and for prices. So we're keeping an eye on that. And also the US dollar today finally had dropped below 100. That's the first time since April of 2022 that has happened. So there's hopes that we're going to see some export sales pick up. But definitely the corn market had been oversold. We lost nearly $1.50 in just 3 weeks. So it needs to come up for air here a little bit from a technical standpoint. And then we'll keep an eye on weather going into the end of July and August as the yield continues to be in question.
So you mentioned corn yield, and how much of a yield cut would we have to have in order to get these ending stocks below 2 billion bushels?
Well, if we can get ending stocks, we would need corn yield to be about 172, and that would get the carryout below 2 billion. If we get the carryout at 170, if we get the yield to 170, that gets carryout down to about 1.7 billion bushels. So it's really important how this yield comes across here. And then the satellites will be up and running in a couple weeks to help give the market some validation of what's actually happening. And it was some of those satellite imagery last year that gave the corn market its low in July, because it was two different satellite companies that essentially agreed on similar yields, which was a lot lower than the USDA, and the traders jumped on that. And that's what made the market work higher last summer.
Yeah. So do you think yesterday's low in the corn is probably going to hold for a little while here?
I think it holds for a little while. Definitely, we're going to see support right now at that 480, 485 level for December corn. Resistance is going to be at 505, 510. Sideways trade seems probably likely in the coming days, unless we see something go wrong with the Black Sea grain deal, or unless we all of a sudden have better confirmation that corn yields are going to be a little bit lower than what the USDA is looking at.
All right. Soybeans, an updated day again was this market. Is it still looking ahead at weather, thinking that we might see a little bit of a decrease in yield, or were there some doubts left over from the report yesterday in terms of how USDA reached its demand objectives or projections?
Yeah, so with the yield numbers, we're going to see the market really, I don't think, do much with that until we get closer to August and see the August weather. The demand side of it is going to be scrutinized in terms of what they're going to be using for crush, in terms of keeping tabs on where new crop export demand is. It's normal that we have the bulk of our exports, of course, go out at harvest, and that's when we see our export pace really pick up. But the question is, if there is any uncertainty that our U.S. yields are in question and the price of the price of beans all of a sudden looks like it's going to work higher, then do we see China come in and do some export purchases at that time? If they look like they're going to go and buy more soybeans from Brazil, well, then other countries might want to come to the United States to buy their soybean needs. So the exports are definitely going to be scrutinized in the coming days and weeks, along with weather.
Yeah. So does $14 kind of cap the November contract unless we get a bigger weather problem in August?
$14 is going to be a very, very hard hurdle to climb over for the November soybeans. It will take hot and dry weather forecasts in August to make the market just go through there. But I would say, from a technical perspective, if that can happen, where we're starting to trade hot and dry weather forecasts for August, the upside for soybeans would very, very quickly point to $15. From a technical perspective, it would go there just really fast. So mostly in the short term, we'll probably see prices just trade sideways. $13.25 is support, $14 is resistance. Again, over the weekend, keep an eye on the Black Sea grain deal. We'll also keep an eye on the value of that US dollar and, of course, weather forecasts.
Gotcha. And the wheat market, right now, is wheat a follower, do you think, still of corn and soybeans, or does it have enough of its own fundamentals that it's trading?
I think it is a follower. I agree with what you said there. The USDA report found a little bit more production on wheat this week. Ending stocks, though, for wheat from a global perspective actually still are slowly trending lower for the past 3 years. There were some production hiccups with Canada. Things are not necessarily perfect in parts of Australia. Now we're starting to hear that parts of Russia might be a little bit too wet. So we're seeing still some uncertainty there. But right now for wheat, traders just seem to think like enough wheat is going to be able to be grown around the world. It may not be potentially the big bullish story that it had been because of the war. But keep in mind, this grain deal still isn't signed, and trade is assuming it's going to get done. So if by chance it doesn't get done, you could see the wheat market rally 50 cents to a dollar quickly next week if that grain deal doesn't get done. But otherwise, yes, you're right. We definitely a follower right now between the corn and the soybeans.
Yeah, and it seems like demand is not helping us out either. Okay,
No,
let's
it's
let's talk
really
about
slow.
the cattle market. We did see a bit of a reversal, a key reversal in the live cattle futures on Wednesday. So, do you think that sticks? Was that a blow off top, or does it not matter technically when you're in such a tight supply situation?
Well, every time we've been seeing a bearish reversal on cattle, the market will respect it for a couple of days. Prices come down a little bit. But to your point, the cattle fundamentals continue to be really friendly and supportive because of the story of tight supplies continuing into 2024. And so that is definitely a supportive tone for the marketplace. We have seen cash a little bit quieter this week. We're seeing box beef values a little bit lower, but that makes sense. The grilling season, the major demand has been met already. I think parents and people at the grocery store still focused on finding cheaper cuts of meat now that we, again, met that holiday demand. So cattle are going to be something where we're going to take it day by day. It wouldn't surprise me if we see a little bit of a price pullback in the short term, just because it seems like every time that market takes 2 steps forward, it needs to take a big 1 step back just to be able to maintain the balance and maintain the overall friendlier prices. But I'm really watching demand, and I'm going to be curious to see how our export pace is over the coming weeks. Maybe the slower US dollar value will help our beef exports. So that's something to keep an eye on. But again, short term, looking for probably a little bit more of a cautious tone and quieter prices.
Yeah. It was just kind of disappointing yesterday to see cattle down when corn was down and you had a good CPI number. So it looked a little discouraging. Okay, hog market. We're back up here today. That market continues to be kind of pushed here by the cash, but we've had a really big runoff of the lows. So how much more upside do you see there?
Well, that's one where we're taking it day by day, and it has had a tremendous run. So again, with the hog market, kind of similar to cattle market, I'll be curious to see what our exports can do in the coming weeks with this lower value of the dollar. I don't know if there's a lot more upside potential, but the market still seems to be comfortable at these higher price points. So I'm not quite sure with what that hog market might have in store for us, but it has been a really fun and friendly story to watch in the short term.
No doubt. Thanks for joining us, Naomi Blohm with Total Farm Marketing. That is Markets Now.